Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Thursday, March 31st, 2022. We'll do a brief update. I want to cover the Qs real quick. The NASDAQ 100, Russell 2000 small caps, a couple developments there to note today, especially after the close. Also want to do an update on VXX. A member of my right side brought up in the comments section one of the recent posts that they've actually, that company is no longer going to continue that one right now. It's still trading. You can get out of it. There's no big move, but I'll talk on that real quick. So best to roll into a different one if you are long volatility right now. Then you might want to close out VXX and buy another one or go with the futures directly, VIX futures. But I'll get to that one second. So here's what happened today. You had the 200-day. Let me turn off all the lines here. Probably the most significant development is you had one day where the NASDAQ 100 recovered the 200-day slightly, but that it's now failed, and so that's a rejection, and it's perfectly normal. Sometimes you make a perfect test of it, and the buy programs kick in. There was one there, and even the following day, you could see the high. Hopefully, you can see it in the video right there, at the top of that red candle, the skinny part, that shadow, was a perfect test. Right there, you had a perfect test. Right there you had a perfect test at the high on that candle, but there was a one day where you popped above it, and that is more than common. You know, a lot of times they'll sell right at the 200. Sometimes they'll take it out for a day or two and then go under. Either way, when you fall back under, it's a failed, we can call it a rejection there, or failed recovery of it, whatever you want to call it. And that's what happened today. So we'll see if we can build on it. I think we will. You guys know where my targets are. I'll reiterate those real quick in the video here. The other thing that happened, you had a minor trend line off the lows right here. If you draw it, I'm not crazy about it because you don't have a lot of reactions. It'd be nicer to see some more along the middle, but there's enough right there, and we're down below that. 60-minute chart, here's what it looks like. There's that wedge I gave you, the 60-minute rising wedge. You had the resistance there, about 370 breakdown. And then if you look closely, what happened is the gap was taken out. Let me turn off all the lines. So I talked about that this morning, that ideally for the bulls, they'd want to see this gap backfilled and then the buyers step in, and that's usually what will happen in a strong trend if a gap is backfilled, and I'm referring to this gap right here. If the gap's backfilled, and they did, I'll tell you, they certainly stepped in at that point, but there just weren't enough buyers. So this is kind of micro analysis. We'll see if it holds, but as of now, you can see 1, 2, 3, 4, 5, 6, and then boom, the last candle of the day just before the close, when that level got taken out, boom, the selling kicked in, and it was big and impulsive. So that's a check mark for the bears. For the short trade that we have right now in the QQQ. Again, you can see the gap back here. This is a 1-minute chart I zoomed down to and see how they tried to defend it all day, and then boom, finally dropped down. So that's what we wanted to see. And just to reiterate, my near-term targets are still about 357.15, a little hair above that, and then 351.68. And if it's an active trader, you can either go for that quick 3% drop, or I think that one was a 5 or something. Either of those, and then either reverse, go long at that point, cover your short, or you can go for the prize, shoot for the swing for the fences if you believe that this whole thing for the last few weeks since we broke out of the the bullish falling wedge pattern on the 60-minute chart, this whole downtrend line here, that breakout right there, that was our, the breakout. We had a double bottom low with positive divergence and all that, and that was the catalyst for this rally. Now, whether that was the end of a correction with the market's going to go to new highs or not, still not my scenario, my preferred scenario. What I believe it is most likely is that this high in November was the significant high in the market, and this whole thing that was the first leg down, and this is a counter trend rally with more downside to come, which, if I'm correct, should go on to hit my we already hit my first target on the weekly, and then we were from up here, T2 about 299 300 we'll call it next target, and then T3 about 268.30, and then finally I think we'll come to either or both of these trend lines here, and this level right here, which is pretty much the pre-COVID highs. That's my final target right now. Okay, so my point to that, if you share a similar view and you want to try to swing that, then what you'd want to do is use a little bit wider stop. You can certainly allow a stop up above that, around 380 or so. That was a major, to me, little topping pattern there, and then we broke down. And if just trail it down, as and if each target or support level on the way down on the 60-minute chart is taken out, you can then lower your stops, and that way you give it some room for the zigs and zags. And if I am correct and that's where we're going, then we'll probably start to see things, instead of, the buyers are going to step in like Pavlov's dogs. Dip buyers will do what they do, and they'll buy dips down to a certain point. But if we start getting near those lows, that's probably where it'll probably waterfall. That's just the nature of wave patterns too. If this was wave one down in a primary 5-wave count, wave two, first counter trend up, and then P3 is the largest and most powerful wave and impulsive, and so that's how, again, it's a big if. And look, we're gonna kind of micro manage this, and we'll see how things happen from here. But I just wanted to bring that up, that you can either, of course, you might have your own targets. You might just supplement your own analysis with mine, and maybe you have different targets. But so that's it. Short-term targets on the 60-minute chart, and long-term targets I just showed you on the daily chart, and how to trade it. I would put pretty good odds that if we hit my first target, we're going to get a reaction off there, and if we hit my second one, we'll probably get a reaction. And then what might happen from there, the reactions might be less, a little shorter in both duration and intensity, how long we bounce or consolidate, and how far. Yeah, so first things first. And what is that? Well, we got our sell signal now. We got rejected where, looked like we probably would. We've lost the 200-day moving average again. And so now first things first, we got to hit and then take out 357 or so. And then if we take that out, we got to, take out 350, 170 or so. So it works like that. And if and when that happens, each one of those will be little check marks and increase the odds you're going to go on down to the next target. If they come in and buy this up and they take out the recent highs, well, they've taken back the 200-day again, and there's really not much big resistance left until right here. Let me go to the weekly chart and show you that again. That's kind of that level right there, about 378, call it 380. So that's it. That's where I'm still leaning towards right now. I know with the recent market action, it doesn't seem like that's going to happen, but that's how these things work. When stocks are going down, it feels bearish. It feels like they're never going to go up again. And when stocks are going up, it feels bullish. And of course, the analysts will jump on the bull train and all that, and even the media start pumping out articles about how big stock buybacks are going to be this year. I read that, largest on record expected. But I did the math on it. And I don't have the numbers in front of me. I read what the expected buybacks for the year are this year, and it's a big number. But then if you look at how much money is in mutual funds, that's what I checked out, and how much is in mutual funds alone, and ETFs, exchange traded products, and it dwarfs the amount of buybacks. In other words, if sentiment changes and the general public, you, I, everyone else, sells out, takes money out of your 401k because they see rates are going up, inflation's ripping, I bet your bottom dollar. The housing market data's lagged, but when the numbers have come out, we've just hit the highest mortgage rates. We're above 4% now. Rates have shot up. That's going to cool the housing market down. It's all kind of ties in together. It's a domino effect. And so what happens, where I'm going, is people start to feel bearish because all of a sudden the housing market starts to slow down or turn, and for whatever other reasons, if they all start selling, taking money out, maybe booking some profits on the big run we've had in recent years, it doesn't take a lot. It takes just say that on average everyone pulls 20% out of their equity funds. Well, that's going to that selling will overwhelm whatever buying the stock buybacks do. So just keep that in mind. We'll see. And again, that's what the markets are all about, supply and demand, and that's what the charts will help gauge which points are likely to where sellers are going to meet buyers, and we look at these little, the way I look at little battlegrounds and see who wins. So far, right now the bears are in control by this one metric, which is put a pretty good weighting on the fact that we're below the 200-day moving average right there. Okay, other things I wanted to mention, then I'll get to that VIX trade in one sec here. IWM, we remain below the big 209-ish level. Again, that is a year-long topping pattern here. Sideways trading range with one false breakout. We had a big sell signal back there, went on to hit my first target, bounce, hit that level again, got rejected off it, and that's it. We've been bouncing between there. We tried to recover it. IWM tried and did on a daily basis, but like I said, let's see how we finish the week. This is that same trading range right there, about 209, right there, the bottom of it. Yesterday, the IWM, just like QQQ, had a one-day recovery of the 200-day simple moving average and then failed it, has since failed. Same thing here. IWM had a one-day pop into there, probably cleared out some stops on shorts, which I like. I like when weak hands get shaken out. It gives you a stronger base and it lowers the short interest, which opens the door for a much bigger drop. If you have too much short interest, everybody buying TZA, shorting the IWM, then there's too many guaranteed buyers. I always talk about that. There's a difference between a bull who's a bullish in rhetoric, that says I'm bullish. Even the folks that come on TV, I like this, I like that, I'm going to buy this. They may or may not buy it. A short seller, I've always said, is the only guaranteed buyer out there in the financial markets. It's 100% guaranteed that a short seller must close out their position at some point in time. To close out a short position, you have to buy those shares. So that's why they're guaranteed buyers. And so that's why when stocks with a high short interest, you have a short squeeze and you can have a powerful move up. So again, it's just, again, this is all a bunch of big ifs. I'm talking longer term stuff. If my longer term targets on IWM are going to be hit, which next target's 171, then about 159, and then about 144, if those targets are going to be hit, it will help if we cleared out a lot of short entrants on the recent rally up. There's IWM. Not only do you have the bottom of the big trading range, you also have the 200-day exponential moving average that it just got rejected off of so far this week, and then the 200 simple right above there. Before I get to that VXX trade, let me just show you one thing I'm watching. XLF financials. On the daily chart, we have this. Remember, we've had a series of divergent highs. It's really one big divergent high. It's been building. We've been building divergence. And then you have these little minor trend lines right here. Pretty distinct if you look at it. So financials are looking like an EKG, right? You get these sharp uptrend lines, even downtrend lines. You break the downtrend lines. This is what it is. There's a sell signal. Boom, you went down. Then you broke the uptrend line. You went up. You ran to the top here. You broke the uptrend line, and they're clean uptrend lines to go down. We just recently broke this one right there. So that puts us financials on a sell signal as well, helping to confirm my short on the Qs and small caps, even though ironically QQQ doesn't have any financials. It's the one sector that's lacking. But again, it shows what's going on in the market. Something's going on here with the financials. And then if you strip away all these lines, I know that chart's busy, turn off everything, and what do you have? Remember, I've called what I believe to be a major top on the financials, and this is it. They're zigzagging lower so far. That's the high, lower high, on lower high. There's your low, and a lower low. So if we can take out that low, boom, we're keeping the near-term downtrend going. And again, that low, if it's taken out, that's coincided with the low in the markets. We'll probably take out the lows in QQQ and SPY as well. So one to watch. You can't completely write it off, but that's a near-term sell signal, and there's probably come on down at least to this 37-ish level right there. So I don't want to do that update on the financials. And then finally, VXX. This was brought to my attention by a member of my right side, and under the post from the other day. Which one was it? The stock index and VXX trade setups right there. That one. So mentioned that here's a chart. We had a good trade. This the recent trade. It was laid out as a long entry somewhere in here. I forget exactly where we hit my first target, second target, third, and then fifth. And I commented on it that day. I noticed that the market wasn't down that much and the VIX itself wasn't up that much, but we had a huge spike in VIX. And I said, look, it was an anomaly, but hey, I'll take it because it let us get out on our final target and avert that big drop. So it was perfect. And then the other day, the same thing. I noticed, hey, there was a big pop. Market didn't drop. No, at least not that much, and the VIX didn't spike, but there was another big pop. And hey, great, if you took profits at T1, I didn't. I held on to it. Now I wish I did because I sold today. But either way, I'm slightly ahead. I was at a small gain, and the reason why is this. My right side said that Barclays suspended issuance of VXX. I clicked on this link from the journal, and for some reason, and you can read my comments here, was that article was dated back in 2019. So I don't know what's going on there. But then I went to a Barclays site, and you can do or click on this link, and here's the press release explaining why they're retiring that. And they mentioned in there that it would they warned of increased volatility. So that's exactly what happened. Look, better to be lucky than smart, right? That pop the other day that got to T1, if you took profits there, really didn't have to do with the VIX popping. It had to do with the volatility. So far this volatility has been going to the upside for us, not to the downside. But at this point in time, you probably want to, because it's liquidity is going to dry up on this one, and so you can roll into. There's several out there. Let's see. You can do. I'm going to write it out for you here. It's hard for me because this is not a drawing tool. UVXY is it's an ultra. I believe that's 2 times leveraged on the VIX, if I'm not mistaken. So you're going to have juice. Look, the VIX is volatile enough as it is, so you probably don't need the juice. And then so the other one is VIXY. And there's other ones out there. There's midterm VIX futures and all this. This is, I'm drawing off off my screen here. VIXY probably be the closest replacement to VXX. And again, it's still trading. You can still get out. It's still about where it was when I mentioned it the other day. So again, props to my right side for bringing that up because I was not aware of that. Usually a broker will send something out to you and maybe I'd missed the message. All right, so that's that. Oh, and of course you can trade VIX futures. That's what I did. I just I turned around and bought the April near-term April 27th VIX futures because that's all these VIX ETNs do is they track the futures anyways. And it's a small contract. It's only about 24,000 per contract is what it represents. And of course, with futures or leverage, you don't put up that much, but it's going to, in other words, if the April VIX futures go up by 10%, you make 2,400 or 2,400 bucks, something like that. And it cuts both ways, of course, so make sure you don't over leverage yourself. Okay, and again, I don't want to go into too much detail on the things I've already covered today. Somebody asked for any new trade setups, and if I see something compelling, I'll let you know. But I'm really focused on what I've been covering a lot lately, and that includes crude oil. I'm actively trading. I'm in and out, long, short, sometimes several times a day. It's a trading vehicle, not a swing vehicle right now for me. But I'm swinging, position short the equity markets, at least for the near term. Those targets I told you at minimum. Long Treasury bonds, and I'm seeing so far these trades are panning out. ZB, the 10-year or the 30-year bond broke out. So did the 10-year. It's been moving higher. And what this is, and I'm going to speak to all the trades that I've been highlighting on recently. It is showing me if this trend sticks, I still have more upside on ZB. Gold's been going up. Treasury bonds have been going up. And in the last couple of days, stocks have been going down. So what that means, and if the trend continues, and I think at least for a little while longer it will, we're shifting away from a risk-on to a risk-off environment. Risk on means stocks go up, and you have a lot of risk on. It's the junk stocks, the pot stocks that we're in, the penny stock, that TMBR, the meme stocks, GameStop, and and crypto and all that stuff. But lately, crypto was down again today. So today was a complete risk-off day. Stocks were down pretty good. The Nasdaq 100 closed down. What was it? Over 1%. The Treasury bonds and gold. How did gold finish? I'd have to look. Yeah, gold still finish up. I'm looking at the futures. So all the risk-off assets rallied today. Treasury bonds, gold, and risk-on assets such as crypto's kind of been doing its own thing. At times they're saying it's the new gold and it's risk-off, but then it was getting clobbered pretty bad when the market was going down up until a couple weeks ago. So anywho, I just wanted to point that out. And so what that's going to do is if at any point, if we're going to go down, let's just say that the rally, at least for a while here, has peaked the other day in the market. Especially, QQQ is it's more of a risk-on index than the SPY, because it has your high-growth tech companies, and so a risk-on environment, you're going to see more heavier buying into those. Than the steady eddy stocks in the S&P 500, like your utilities and REITs and other things like that. But where I was going, if this goes down, continues to drop, and we go down, and typically, but not guaranteed, it won't bode well for those pot stocks. And I already updated them today briefly. You'll see risk out, but the only saving grace about that is the pot stocks have a very low correlation with the stock market, and there are times where I've seen the stock market correct and the pot stocks going up because they're not subject to indexing. If QQQ hits my targets here, one thing I'll tell you is it will most likely, you're going to see, just like today. I'll read it off for you right now. Okay, this was QQQ down 1.4%. 1.04, 1%. Here's Apple, 1.61, Microsoft, 1.2, Alphabet, 1.6, Amazon, 1.4. See, just birds of a feather flock together. And so these market-leading FANGs, due to the indexing, it's outflows of the Nasdaq 100, and when you may not ever own a share of Tesla or Apple or Facebook in your life, but if you trade the Nasdaq 100 via NQ or QQQ, or even growth funds you're selling through your 401k or whatever, then it's going to cause that selling. When they get redemptions, they sell what they hold, and what they sell the most of what they hold the most of, if that makes sense. And they hold the most of the top weighted components. Apple, Amazon, haven't updated the numbers in a while, but last time I checked, in December, Apple was about 12% weighting in the Nasdaq 100, Microsoft about 10, and then down the line. So those two alone, just Apple and Microsoft alone, make up over 20, almost about 22%, nearly a quarter. Over 1/5 of the entire Nasdaq 100 is attributed to the performance of just two stocks. So where I'm going is, again, that's where the pot stocks can sometimes flourish, even in a risk-off environment if people are bidding them up. But that's it. Again, that's only a small part. It should be, at least for me, a small part of a portfolio. Because they're volatile and they're high risk, and they're I call them junk stocks because the fundamentals are not that great. All right, I'm going to end it here, get the video out to you guys. The main thing I wanted to do is just bring up that VXX. And again, props to my right side. Thank you for bringing that up. And maybe tomorrow, I haven't even had time to look at the charts of VIXY. I'll give you comparable targets. That's what I'll do tomorrow. I'll mark this up and see if I can give you some targets to shoot at. Right now, if you're looking for a near term, I'd put a line right about here. You can see it peaked out right about here. I'd lower it a little bit under that high. I'd shoot for at least 240 right there. That's a nice looking target. It has a similar chart, positive divergence there at the low, and it's been stair-stepping higher. This recent low was above that previous one, so you have 3 consecutive higher lows. And boom, if we can go up there and pop that high, there's a potential for this one to take off. All right, I'm going to wrap it up here. This has been Randy Finney with the right side of the chart. Have a great night.